Good morning. Good morning. Good afternoon, everyone. Thank you for joining today's webinar, Streamlining FP&A for Private Markets. My name is John Conroy. I'm an Anaplan account executive on the financial and business services team here in the Northeast, and I'll be the host and moderator for this session. One quick housekeeping note from the start we'd like to get out of the way is we want to make this an interactive session. If you have any questions during the webinar, we please ask that you use the Q&A feature at the bottom of your screen to submit them. And we'll have a portion of time at the end of the presentation to go through those and answer as many questions as we can. The session is being recorded and will be made available afterwards. So we look forward to a great discussion. So today, we're going to explore key FP&A themes focused on private market firms and cover items including industry trends, strategic decision-making, and the role of technology in automating these functions. For today's outline, we have a panel-type discussion for the first part of the webinar, which will be followed by an Anaplan demo of Alpha Alternatives FP&A accelerator application. For today, we are thrilled to have a panel of industry experts with us. And so as we walk through, we'd like to start with some introductions. As I said, my name is John Conroy, but I would like to introduce the rest of the panel, starting with Emma Donnelly.
Hi, everyone. I'm Emma Donnelly. I'm a managing director and head of financial reporting and analysis at Sculptor. And so in that role, I oversee FP&A, compensation, financial reporting, and investor services.
Great. Good morning, everybody. I'm Brandon Diaz. I'm a principal at Blue Owl Capital, which is a publicly traded alternative asset management firm with $235 billion of AUM. I joined the firm about a year and a half ago to build out and scale our FP&A team and function. And I have over 15 years of industry experience in the alternative asset management space in both FP&A and various other finance roles. And so glad to be here with both Anaplan and Alpha Alternatives, who have been great partners of Blue Owl in helping us scale our FP&A function through technology.
Good morning, everyone. My name is Santiago Gruder. I'm a partner with Alpha Alternatives, formerly Lion Point Group. Lion Point has been around in the brand name for over 10 years. We have now unified under the Alpha Group brand, which provides broader management consulting services to the asset wealth management and insurance industries, as well as cloud data analytics services. I oversee our EPM North America practice focused on private market clients. I've been in the alternative investment industry, focused on operations and technology for over 10 years. The last 5 years of those with Alpha Alternatives, at which point I was introduced to Anaplan as an enterprise modeling platform, and who is a core technology partner for us. I've managed over 20 Anaplan implementations spanning several different use cases, ranging from portfolio, asset-specific, fund operations, and what we are now focusing today, which is management company-specific FP&A type use cases. I'm also a CFA and Kaya charter holder.
Hey, everyone. I'm Ashley Prentice. I'm an Anaplan solution architect, as well as a senior manager at Alpha Alternatives. I've been leading Anaplan implementations for over 6 years now within the financial services space, and looking forward to showcasing our FP&A application to you guys today.
Great, thank you all. So Santiago, I was hoping that maybe you could set the stage for today's discussion with a little bit of background from the previous discussion that you had on this topic with some follow-on information and just kind of lead us into where we go from there.
Certainly. Thank you, John. Yeah, I think it's important to share with the audience some background into an FP&A roundtable session Alpha Alternatives co-sponsored about a month ago, and some of the trends and items discussed in that session. The roundtable was attended by over 40 private market professionals in New York, and the group shared where each of their firms stood in defining what a scaled FP&A function should look like and some of the challenges they are all facing. It appeared the room was divided into 3 distinct groups. About a third were in the early stages of evaluating that process. Their core focus was to develop a formalized FP&A procedure within their firms, stabilize year-end and quarterly management reporting packages, and were really fully dependent on Excel spreadsheets for their core calculation, analysis, and reporting. Probably another third of that group was in the process of scaling their FP&A operations and had started evaluating technology platforms, vendors to scale their functions, such as Anaplan and Adaptive and others. They were still relying heavily on Excel to run day-to-day operations and formal processes, but were including some business intelligence tools such as a Power BI or Tableau to have standardized management reporting. And really, the last third had implemented a technology platform to scale their respective processes and were using it to transition away from Excel. The next step for these firms was to identify how best to scale their current solutions across different FP&A functions to support their current teams. A common challenge of all of these groups was their current teams were either responsible for multiple processes or the recipients of outputs from different teams. That inherently makes it difficult to centralize this information in a way that is simple to analyze and reflective of real-time updates from the business. Functions such as revenue forecasting, compensation management, and more traditional expense planning and budgeting resided within different teams using different data sources and inherently led to these siloed and broken pieces. As firms continue through their maturity curve and think through establishing and formalizing clear FP&A functions, it is critical they consider technology solutions that will enable multiple teams to collaborate within one single platform with the ability to clearly provision security roles, workflow capabilities, and seamlessly connect multiple processes and models to reflect real-time analysis. That's table stakes for nowadays for any evaluation of a technology or vendor solution. And this is why we're here today, wanting to expand the conversation with our guest speakers and take a deeper dive into how their firms are thinking about these current challenges and solving them. With that background and context established, I'll hand it back to you, John, for the actual panel discussion.
Great, thanks, Santiago. As we were putting the discussion together, we thought about a couple of topics that we wanted to cover off with the, leveraging the particular expertise of the panel. And really, the first one that we talked about a little bit was, defining the role and value of FP&A within the organization, right? Things like what is the current role within your organization and the makeup of your team. And Emma, I'll start with you. Would love to get your thoughts on that, how Sculptor thinks of these topics and, your relevant experience for the discussion.
Yeah, so at the core, our FP&A team is really focused on providing insightful reporting and analysis to management to assess ultimately, right, the performance of our business and make decisions. And so we do that through sort of some of your standard FP&A pieces, right? We manage budgets and forecasts. We're really a centralized center for scenario analysis and financial analysis right across the firm, so both at the firm level and in many cases at our fund level. And then in addition to that, kind of like overarching, we develop and maintain firm metrics to help us measure those things. And we've developed management reporting packs, right, to help synthesize all of that information up to management. And on top of that, we're really a partner cross-functionally, right? So we're partnering across teams to drive process improvement, to enhance analysis that are coming out of individual teams. And so our team is driven by a VP and associate that are really focused on core FP&A. And we've also more recently pulled comp into the really as a subset of our FP&A function. And so we have an additional comp manager that focuses on comp exclusively. Just to dive in a little bit more on some of that, right? I mentioned that we're a centralized team. So we really do bottoms-up modeling across all of the firm modeling. So when we think about P&L, that's all of our AUM and revenue forecasting at the fund level. In certain cases, we're going deeper than that. Late-stage funds, we're looking at things at the deal level or the investor level, and some of our more liquid funds where we have a lot more dynamics there. But ultimately, our team is focused on sort of being the centralized experts on all the numbers across the firm, right? Whether it's performance, flows, key dynamics, key terms of our funds, and synthesizing that for management. I mentioned that we do our comp and headcount planning. We do tax analysis. We've found, and this has grown over time, right? We didn't start like this out of the gate, but we found that, to your point on the pain points, centralizing more and more of this enabled us to create a more powerful output for management.
Great. And Brandon, anything that you'd add from the Blue Owl perspective?
I'd echo a lot of the things that Emma just said. At Blue Owl, the FP&A team is responsible at a high level for all the planning and forecasting for the firm at the corporate level, both short-term and long-term. We produce various forms of management reporting for our C-suite level executives and the leaders of our business units. We really support the firm from start to end through its quarterly earnings process, from reporting the numbers all the way through producing an earnings script and Q&A for our research analyst calls. And we perform various ad hoc analyses and analytics to help management make key decisions about the future of the firm, and to confidently give out financial outlook of the firm. We have 5 people on the team today. We've grown our team pretty quickly. All 5 of us joined in the last 1.5 to 2 years. So we're a pretty nascent function, but have been growing pretty rapidly and really focus on building out a scaled team and process. Some of the key areas that we're focused on, kind of echoing what Emma said, is the development of an annual operating budget for the firm. We have a full quarterly kind of reforecast process, and we're also responsible for the long-term targets of the firm. And so we have an investor day coming up in February of 2025. And so we've been spending the last couple of months really focused on those long-term 5-year targets. But all of that is really driven by our corporate financial model. So think of that as a financial model that houses all the projections for all of our funds. And so I think at our latest count, we have close to 100 funds that we're modeling out from a revenue side of things. Compensation expense, G&A expense, interest expense, taxes, AUM, fee-paying AUM, other key capital metrics like fundraising, capital deployment, key ratios, margins, average fee rates, et cetera. And so our corporate model is really sort of the holy grail of everything. It drives everything else of what we do. And so I'm sure we'll get into why a technology solution was key for us for that model.
Yeah, absolutely. The third bullet point is always an interesting one, on targeting and measuring, ROI or KPIs and things for the team. Any specific thoughts around that maybe have evolved since you've gone down this path?
A couple things come to mind. I think one is sort of key to, I think, what we're all doing is minimizing variance, right? So looking at our forecast to actuals and minimizing the volatility there. And then I think on top of that is much broader and maybe a little bit more intangible is continuing to evaluate and measure the value that we're bringing to management, right? What is the efficiency of our reporting? Are we able to proactively provide insightful reporting rather than waiting for the request? And then on top of that, and kind of behind all of it to some extent, is just continuous process improvement, right? I think both across our FP&A function, and we really partner quite a bit cross-functionally to drive that across the firm.
I'd echo a lot of the same themes. I think 3 areas come to mind. One is the timeliness of deliverables. 2 is the accuracy of our forecasts and projections. And as Emma mentioned, really the impact and that we're having on the firm making strategic decisions. The first 2, timeliness of deliverables and accuracy of our forecasts, are really kind of tangible and easy to measure. And I think if we weren't meeting those types of targets that we set out, it would be indicative of a broken process or broken technology. And so easy to identify, I think, and maybe a little bit harder to fix, but certainly something that's measurable. And then, a little bit less tangible would be, the impact that we're having on the firm and driving its strategic decisions. But certain areas, come to mind that we're thinking about in terms of, what kind of cost savings are we generating across the business via our budgeting process or via new expense guardrails that we're proposing for management to put in place, or as we acquire some of our newer M&A targets, what kind of cost synergies can we realize and as an FP&A team drive.
Perfect, thank you.
So one, I guess, follow-up I had, I know, Emma, you had mentioned around probably compensation planning, and Brandon, I know you mentioned sort of hiring, like it's a sort of a nascent team that you've sort of scaled pretty rapidly within Blue Owl. Specifically on compensation being that sort of a key topic that we've encountered as well a lot in Alpha, are those sort of really siloed and specific to a few folks within the organization that manage the compensation process? How do you make sure you're cross-sharing that information and that gives you sort of a holistic view from a comp perspective? And as part of that, sort of diving into everything that means from also like GP carry plan allocations and all of those complexities.
Sure, I'm happy to start if that's okay, Emma. We have a little bit, I think, of a unique team structure in that we have a compensation controllers team that sits within our management company, and they're really responsible for compensation at the very, very granular, like person by person level. We obviously partner very closely with them, and a lot of the analysis and build up that they're doing gets fed into our corporate model. But at the most granular level, we have a team that's solely focused on that every day. And to your point on carry, we also have a dedicated carry team who's focused on carry compensation. And so I think we're a little bit unique in that we have teams built within our management company, but we partner very closely with them.
So we were set up very similarly up until recently. We had a separate compensation team that sat within our management company controllers. Our carry process is probably a little bit lighter than others, and certainly than Blue Owl, given we're not, a strict PE shop. We're a little bit more diversified. But we've found that we were working similarly, where our comp team was doing the most granular level of forecasting, and the sort of summary version, team by team, of that was flowing through the FP&A models. And what we were finding is that there was this disconnect, and we could create better reporting, better forecasting if we centralized that process within FP&A. And so we still have a carve out within FP&A. We really just have one individual, in addition to myself, that has access to all of the more granular information, but we're able to really connect the processes a little bit more. And I know we'll get to that technology piece of that shortly, but that's really key for us, is really bringing them onto the same platform.
Great,
Thank you. Sorry, back to you, John.
Yeah, if you could advance, Santiago. So you touched on it a little bit in the first answer, but always an interesting point to understand. How did your firm determine the inflection point to begin solving these problems with a technology solution? And if you could talk a little bit about specifically how Anaplan is supporting that process, I think that'd be helpful for the audience.
Sure. So for us, the original genesis was probably more of where Brandon is today. We were a publicly traded company up until about a year ago. And so there was a major focus on continuing to refine our forecasting so that we could better support the earnings process. And this is probably back 8 to 10 years now. And so it ultimately evolved into this monster Excel revenue model, right? And it just kept growing and growing and became really cumbersome from a resourcing perspective to maintain the model, which limited us and what we were able to provide value otherwise. We've always kind of been a relatively lean team, and you run an Excel model, there's one person in it at a time. So the original sort of push towards the technology side was to free up resources, right? We had this major resource constraint and arguably a key man risk there. And to be able to enhance what we were doing, right? Because it was this monster Excel model, we were limited on what we could do from a scenario analysis perspective, and we were bogged down with mechanics, which slowed down our response time. So that was the most obvious case for us to shift to a platform. Anaplan was a fantastic solution for us because we had built this very customized, very granular Excel model. And because of the blank slate nature of Anaplan, we were able to replicate it and enhance, in many cases, what we were doing there and streamline. So for us, that was really like the push, was to reduce our turnaround time, reduce the resource investment that we had, just maintaining the models, and to be able to enhance the ultimate output.
Great. And Brandon, I would throw the second question to you about determining the initial use case for your organization, having a little exposure to those discussions early on. I know it was an interesting process.
Yeah, I mean, to step back, I think Blue Owl, has a little bit of a unique story here in that, our firm was built via the combination of two firms that listed via de-SPACing transaction, Owl Rock and Dial. And then we quickly acquired a third business, Oak Street, which became the basis of our real estate business. But essentially, we very quickly became a $100 billion plus AUM firm. And so when we were looking to build out this function, we almost immediately had a scalability problem, right? We had a massive Excel model that we built, similar to what Emma was talking about. Only one person could be in it at a time. There were certain security issues. We didn't want certain people to see certain parts of the model, et cetera. And so we just had right out of the gate a massive scalability issue. And so we immediately started looking for technology solutions that would fix that problem. I think the 4 areas that we were focused on, one is a platform that would help us scale. And we really wanted to be on a platform that actually helped us model and produce our projections, our budgets, et cetera. We were not interested in a solution where we were going to be doing the modeling in Excel, just uploading the output of that forecast or budget into a system for reporting. 2, we needed maximum flexibility in a system that could support and be really flexible. I mentioned we have hundreds of different fund models that come in all different sizes and shapes, different fee constructs, different wrappers. And so we need to be super flexible in how we can model each of those out. I think third, we needed a system that could easily connect to other systems within our Blue Owl technology ecosystem. So, lowest hanging fruit being Oracle or General Ledger, but also, over time to things like Salesforce, where a lot of our capital raising forecasts are housed, as well as Workday. And then lastly, security was an important thing for us, as I mentioned. So we wanted to have a system that had the most granular level of securities, where we can restrict access to what folks can see and only let them see really what they absolutely need to. And so Anaplan was the clear leader when we looked at different solutions. And so we moved quickly. I think we started talking to John within 3 months of me being here at Blue Owl. I think within 6 months, we had started working with Alpha to start implementing the system. So, and in terms of initial use case, we went for kind of the big bang, which was the corporate model. We wanted to do it all. That was the main pain point. That was the thing we knew we needed to scale the most. And so we went after that first, with the idea that once we targeted that and got that through, there was a whole bunch of ancillary things that we could build around it. We can go around the firm, showcase what we built, and kind of if you build it, they will come, sort of a method to building out the platform.
Great. Emma, anything to add, or any thoughts just on lessons learned from an implementation standpoint?
Yeah, we've had a similar thought in terms of our rollout, where we, started with our AUM and revenue more specifically, and then sort of tackled other areas of FP&A. And we've actually started showcasing very early on to other teams to get them to start thinking about it, because it is in so many ways like an Excel parody, right? So where we have a lot of, even our fund accounting teams sort of aggregating information across teams to report to the management company, there's so many broader use cases that we're really looking to expand there. And so I think that was one piece of just the initial takeaway, is that, Anaplan talks to connected planning, and it really is true. It can really pull together teams and ultimately synthesize a more connected planning function. In terms of our key takeaways and lessons learned from the initial implementation, I think a couple of things. One, for us, I think, was just broader buy-in. Having our teams bought into it, it's a major investment up front, and sort of being prepared for it. In some cases, we learned over the course of it, we had Excel models that we were able to point to as part of the implementation. But in some cases it was, here's an example, but we don't want you to do that. We want you to verbally do this instead. And what we found was more efficient as part of it was to build a lot of mock-ups in Excel, even if they were really basic mock-ups of what our sort of future vision was. And it enhanced the efficiency of the implementation overall. And I think the other point that we took away was to really roll up our sleeves and get in the models. And it allowed us to really, by the end of the implementation, model side by side with our alpha team and take ownership of the models and ultimately be able to run and enhance what we had out of the gate at Go Live to where we are today. And of course, we certainly still go back and partner with Alpha on like broader implementations, but our models are dynamic, our business is dynamic, it's ever evolving. So being able to be nimble in the product and tweak as we're back testing, right? Tweak our models, tweak the logic, expand what we're doing has been really critical for the success of our team.
Wonderful. So I think you gave us a nice little segue into this last topic here for the discussion, but it's kind of leveraging Anaplan as a connected planning platform. It's always an interesting discussion to see how different firms think about this, but maybe Emma, I'll go back to you. Could you talk about a little bit more about how the FP&A team may be integrating with other parts of the business or your operations, and the level of granularity that you need to get to, and how you've been able to do that to either success or where you want to see improvement?
Yeah, so I mean, we really do so much centralized within FP&A when we think about modeling. So rather than sort of collecting forecasting outputs from a number of teams, it's really happening all within FP&A. That does require a major partnership with teams across the firm. I think the most obvious ones are fund accounting and management company controllers teams, right? We're relying on them for their allocation files and understanding the drivers of certain things. And so there's a huge partnership there. And then, of course, more broadly with the heads of our businesses, how we think about fundraising, what's in the pipeline, how do we think about deal pipelines, right? All of that, we kind of have a finger on the pulse across the firm there. And it's important for us to be sort of dialed in across the board. In terms of how we think about technology and how that can be used there, I mentioned a little bit earlier when we had this like sort of silo issue with our comp team versus FP&A, where it was happening at a more granular level. And so by bringing them together, that was sort of the initial win, right? More transparency is helpful. We can think through it in a different way. But the next piece is to really bring the processes together. And Anaplan that's sort of the next stage of Anaplan for us. Our comp process is entirely offline right now, and doesn't need to be, right? There's a lot of solutions for that. Anaplan is a fantastic solution. And because of the way Anaplan is structured, we'll be able to build out our comp function, maintain the security and the walls around comp within Anaplan as a separate model, but automatically feed those sort of live updates to our FP&A model. And so that's sort of like the initial stage of our like connected planning journey, I'll call it. And then beyond that, we've talked to a lot of our fund accounting teams, even, outside of, how you would normally think about modeling and forecasting, but in other areas, right, they do a lot of quarterly reporting and aggregation of information into our management company. We're sort of pushing that as like the next stage. There's a lot of Excel files that we're taking in, even on the FP&A side of actuals, right? All of our final metrics by fund. There's a lot of granular information that's clunky to consume. And so for us, selfishly, the more teams we get in Anaplan, the more streamlined our processes are going to become.
Great. And Brandon, I'll kind of kick the same question to you and also ask, how you're thinking about this, knowing you're about a year into your journey here, how you're thinking about, other areas where you're trying to scale using technology.
Yeah, I mean, now that we've seen the power of the platform, I think we have an endless kind of roadmap of things we want to do. I think in the more near term and in 2025, we're really going to be focused kind of on 3 areas. One is kind of reimagining what our management reporting looks like and how we can utilize Anaplan to build a more efficient and better management reporting platform. Number 2 is to build out our G&A forecasting and budgeting a little bit more. Our initial crack at it was more of a top-down driver level expense build, but we're getting a little bit more sophisticated as a firm and doing more bottoms-up build, kind of by departments and cost centers. And so we're going to flip to more of a bottoms-up build in 2025. And then lastly, similar to some of the things that Emma mentioned, like there's just a lot of low-hanging fruit of teams in our finance organization, management company, fund accounting, who do a lot of things that are adjacent to our model or utilize our model for certain things. And so we want to get them in Anaplan and really connected into what we already built. And we've already had 1 or 2 use cases that we partnered with the Alpha team, and in 2-3 weeks they were able to build out the solution for our management company team in Anaplan by plugging into and leveraging a lot of the work that we already did as an FP&A team. And so those are just a few examples. I think beyond 2025, it's about being connected more to the rest of our organization. I mentioned connecting to Salesforce, Workday, et cetera. Those are all definitely on our long-term roadmap. We just want some of our teams there to, further develop out their technology and processes in those systems first before we bring them into Anaplan. And so a little bit of kind of wait and see before we go down that path.
Awesome. Yeah, I want to be mindful of time before we go to the Alpha demonstration. But one last question I would ask is, are there any challenges that you saw that you think, are a good point to look out for other organizations trying to go and embark on the same type of journey? I'll put that out to either one of you if there were any, anything in particular that you'd like to call out.
I think for me, I would say the biggest hurdle is getting folks to understand that there's life beyond Excel. A lot of people fear kind of the unknown of not being in Excel, or think that their Excel models are too complex for a system to generate. But I can assure you, we've had some really complex models. We have a really funky corporate structure. We model out actually on 3 different bases: non-GAAP, GAAP, and tax. And so a lot of the forecasting that we need to do has to be on very granular at the entity level. It's super painful. We thought we were going to scare the heck out of the Alpha team when we showed the model, but they didn't even flinch. This is kind of second nature to them. So, I think that's one of the biggest hurdles, is getting people comfortable with the fact that everything that you can do in Excel, you can do in Anaplan, and it's going to help you scale your processes better.
Terrific. Okay, well, with that, I'll remind the audience to please enter any questions into the Q&A. And at this time, I'll kick it over to Santiago and Ashley to walk through the Alpha Anaplan FP&A Accelerator. Thank you, Brandon and Emma.
And thank you, Emma and Brandon. Quick outline before hopping into the demo. So at Alpha Alternatives, we've developed this FP&A sort of pre-built application, highlighting core functionality around these different number of use cases. For the demo today, we're going to be focusing on workforce planning, OpEx, revenue modeling, as well as scenario analysis. So really the focus is on having an easily configurable and specific app that we can then deploy within prospects or clients across these different set of use cases. And with that, I'll turn it over to you, Ashley.
Sounds good. Thanks, Santiago. I'm going to go ahead and pull up my screen. Going to go off camera just to maintain computer performance here. So I'm going to go ahead and pull up our Anaplan application. All right. So what we're looking at here is just the landing page of our Anaplan FP&A application that's bringing together those various planning areas that Santiago had just mentioned. So everything within this application is dynamic and in real time, allowing us to really easily move from high-level overviews like fund performance and total expenses to some more granular details like employee level compensation or portfolio company metrics. So to start, we're going to take a closer look at workforce planning. And from there, we'll explore a few other examples within OpEx revenue planning, see some scenario planning and reporting throughout, to hopefully demonstrate the tool's flexibility and automation at a high level. Now, just given the current time that we have, we are just touching on a few of these different examples. But like Santiago mentioned, we do have a lot of other functionality built into this application. One other thing that I do just quickly want to highlight before I jump in is, given that I'm doing this demo, I have full access to this model. So I'm going to be able to see all of the pages and dashboards within this application. I'm going to have access to all of the departments and other hierarchies within the app. But of course, Anaplan is highly configurable in terms of security. So, depending on what role a user has, what departments they would need to view, what read or write access they have, we do have a lot of flexibility and control around the security within the application. All right, so starting with workforce planning, the goal here is to streamline our planning process for this top half section of our bottom line expenses. So we're looking at total compensation here. The model that we have for headcount and compensation planning is architected as a hybrid planning approach between a pure position-based forecasting process and a bottoms-up employee methodology. So the calculation engine leverages tops-down assumptions and integrated employee level inputs from our employee roster, which is coming in from our HR system, to ultimately drive our headcount and compensation forecasts, which is what we're looking at here within our income statement. I'm going to show you what I mean by that through a couple of quick examples here. So heading in to our workforce planning section and starting within our headcount tracking dashboard, here I'm able to see the forecasted movement across the current planning year for all of our departments. But focusing in on just the finance department, we can see what our beginning headcount is at the start of the year. So we're looking at a fiscal year of 2024. I can also see any expected movement that we're planning for throughout the year, such as hires, transfers, etc. And then I can also see what our forecasted ending headcount is, including planned but any unfilled open positions. Below, we can also see a detailed view of all of the open positions that are currently available within our organization. And here we can see those 2 unfilled open positions within the finance department. So this view is always going to provide us the most up-to-date information to give us that real-time visibility into our headcount trends and our hiring needs. From here, let's take a more granular look at our employee level headcount summary, where we're able to see our existing employees. So now you can see here when I click this dropdown, we can see all of the employees rolling into our finance department, as well as any approved open positions. So any positions that are currently showing up within this list here have already gone through the appropriate workflow process. They've already been sent to HR, so HR is currently tracking these positions as well. And if we needed to add any additional positions or roles for the current planning year, we can easily do that within the application itself. But we've already seen that we already have these in here. We already know that those went through that process. So taking a look at Taylor Swift as an example, we can see here that given she's an existing employee within our finance department, all of her latest information has been pulled in directly from our employee roster that we've integrated with our HR system. We can also see her monthly expenses if I scroll down a little bit here, which are driven by our tops down assumptions. So let's make a quick adjustment to just demonstrate how these employee expenses can be managed. Coming into my workforce admin assumptions page, I can view and manage my assumptions by location, as well as by department. So any changes I make here based on the selections I've made at the top of the page are automatically going to flow down into our employee level expenses. We can see here that we currently do not have a merit increase applied to our fiscal year 2024 for the finance department. So I can simply input a 5% merit increase here, and this will automatically apply to any eligible employees within the finance department based on our global merit assumption. So we can see what our eligibility criteria is for that merit increase. And we can also see that this merit increase is going to be applied within the month of April for the current year. Let's take a look. Heading back into my employee summary, we're still looking at Taylor Swift. We can now see that as of April of 2024, she automatically has that 5% merit increase applying to her annual salary, and her monthly salary expenses have been, will update and reflect this merit increase and are prorated to the remainder of the fiscal year. If we flip over to one of our unfilled open positions, our senior manager role, we can see that since this position does not meet that eligibility criteria for a merit increase, their salary remains unchanged throughout this fiscal year. Finally, let's take a look at how this position eventually gets filled, leveraging our integrated data from our HR system. So coming in to my headcount history dashboard, this is where I can see and validate the latest headcount roster that's automatically coming in from our HR system. So whether it's UKG or Workday, we have that automated feed to bring this data in where we can review it before it's fed into our current forecast. So like I mentioned, Anaplan is a real-time tool. However, we can make it as real-time as we need it to be. So with the HR roster data specifically, we want to be able to confirm that everything looks good before we have that latest information reflected in the forecast. However, once I run this process here, Anaplan is going to take that latest employee information, feed it into our downstream calculations, and ultimately into that final reporting. One thing that I just want to point out here before we move forward is that we do have Tom Cruise coming in with the latest roster as a new employee getting hired within 2024. And he's been assigned a position ID of P021 within our finance department, which aligns to that unfilled open position we had just taken a look at on the previous page. So if I go back now after bringing this data into our model, and I come back into my employee summary, we can now see that Tom Cruise is an employee within our finance department. He's filled that P021 position, and we can see that his latest employee information is now reflected within our current plan. We can also see this employee movement if I pop back into our headcount tracking page, and we can now see that within the finance department, we now only have one unfilled open position that will need to be accounted for within this fiscal year. And of course, any changes that we make to our workforce plan is automatically going to be reflected within our income statement. All right, so from here, we're now going to transition into our operating expenses. So while we have multiple different methodologies for planning our operating expenses within this application, we're just going to walk through one example of how we can leverage driver-based planning. And just as a reminder, the current planning year for this model is 2024, with January being the first period of forecast. So if we take a quick look here at our income statement, we can see that for the Q4 months of 2023, all of this data is being populated by our historical actual. So this is coming in automatically from whether it's NetSuite, SAP, that's feeding in for our actual period. So we have all of that data aggregated into our income statement. And then our forecast data is going to start in January. So all of the planning that we're doing within the application is going to build that forecast. So now specifically looking at professional fees, we can see that while we have historical data coming in, we currently don't have any forecasted expenses planned for our current year. So I'm going to build the forecast for professional fees within our driver-based planning dashboard. So what we're looking at here in this top section is I can see all of the planning areas that had actuals within the prior year, again, looking at within the finance department. And I can also see whether or not they have been planned for in the current year based on the plan indicator. You can also see that when I select a different planning area, the entire dashboard syncs to that selection. So I can view the relevant information for that planning area, as well as do all of my planning for my forecast based on that selection. So again, we're looking at professional fees, and we can see that the plan has not been completed for this year. If I scroll down a little bit more, I can also see all of the underlying GL accounts that make up that planning area, as well as the prior year actuals in local currency, and then the current year budget. If I scroll down a bit more, this is where I can actually start to build this forecast. So within here, I'm able to select a driver base for each of these underlying GL accounts. These are, of course, just examples. These can be completely customized. So we've set these up with predefined logic in order to leverage these for our driver-based planning. So you can see that there that when I selected the prior year amount plus growth percentage for my driver base for this GL account, the plan automatically starts to populate in this table above. So we're really just pulling those prior year actuals from 2023 into our 2024 periods. I could also input a year-over-year growth percentage, which will automatically apply to those values up above. We can also apply some spread methodologies. So I can do a straight line spread driver base, which would require just an input to determine which value we're leveraging for that fiscal year total to spread that across those months. So you can see it just evenly spreads across the periods. Or we could leverage a seasonal spread. So this would, again, require an input for the full year total, but that's going to spread those amounts based on where we saw actuals in the prior year. Again, just examples of different logic that we can use for these driver bases, but that's predefined and really easy to leverage when building that forecast. So once I've completed that plan, I can come back into my income statement. And now we can see within our finance department, we can see that forecast flowing through for our professional fees line. Another report that we can leverage within our P&L is our P&L variance report. So within here, I'm able to review variances across both time periods and versions that we're planning for within the model. So for example, if I wanted to compare my, let's say, prior year actuals against my current year working forecast, I can simply make those selections from the drop down above. And you can see that when I change those inputs, the report below automatically updated to pull in that relevant data. So here we can compare side by side those prior year actuals, current year forecast, the absolute change, as well as the percentage change. I also have the flexibility to customize this report with adjusting my variance thresholds. And of course, this can be done as granular as you need it to be. So if you needed to do monthly, month-over-month variance reporting, that's absolutely an option within here as well. All right, so coming back into the income statement one more time, we're now going to shift over to walk through a couple of fund revenue planning examples. So looking at this top revenue section here. To do that, I'm going to head into my fund revenue planning page. I'm going to leverage these report selectors to adjust my view to do the planning within here. And then you can see that we also have the ability to plan for both existing and future funds. So for now, I'm just going to focus in on one of my existing funds. And then if I scroll down a bit, you can see here within the fund assumptions grid that I have control over fund-specific planning assumptions like investment period dates, management fee rates, as well as charging mechanisms to drive my fund revenue forecast. So for example, if I were to update my fee end date to, let's say, July 2025, you can see that the fee paying AUM automatically updates, moving those forecasted amounts to the other bucket as of Q2 2025. Taking a look at the pre-investment period assumptions, we can see that the fee basis is currently set to commitment, but similar to that driver-based planning we just took a look at, we can easily configure this, leveraging a predefined dropdown here. We also have the ability to adjust our forecasted fee percentages for different investor groups like full fee, reduced fee, or no fee investors. And if I take a look at my management fee outputs in the grid to the right, I can see what my forecasted management fees are based on those current assumptions against the actual management fees that we're receiving from the fund team for historical periods. So I can adjust my forecasted fee percentages to better align to what we're seeing in recent historical periods. Lastly, let's take a look at the performance revenue section at the very bottom here, focusing on our total carry. So this data can be imported in from a separate Anaplan carry model like we had mentioned previously, but we then have the ability to make some dynamic adjustments here to drive the final performance revenue that ultimately flows into the P&L. So as I tweak the participation rate within my assumptions grid, you can see that the final performance revenue value adjusts accordingly, and that's ultimately what we'll see flowing in to that integrated income statement. All right, and the last item that we wanted to show you guys related to revenue planning is our portfolio forecasting page, where we're able to view fund level revenue forecasting based on granular information at the portfolio company level. So here I can view key metrics like exit dates, MOICs, projected returns in a single view, allowing us to really monitor the health of our portfolio in real time. So by leveraging an automated template, we're able to easily gather and update granular portfolio company data from our portfolio or investment management teams. And the system will automatically take this data and roll it into these broader fund level returns. Calculating metrics like gross IRR to net IRR. So this ensures that the fund performance is always up to date and reflective of those portfolio dynamics. Lastly, within here, we can also layer in some scenario capabilities. So we're able to bring in this portfolio company level data for different scenarios, such as a delayed exit or adjusted valuation. And we're then able to compare that forecasted fund level J curve for each of these different scenarios against our budget. Now, I do want to be mindful of time because I know we're approaching the end of the hour. So that is going to wrap up and conclude today's Anaplan demo, but hopefully that provided some valuable insights to you guys into how Anaplan can bring some of these different planning areas together in a unified platform. I will go ahead and pass it back over to the team so that we can run through a few minutes of Q&A.
Great. Well, thank you so much, Ashley. It's a wonderful demo. Appreciate it. So we've been encouraging participants throughout the session here to enter questions into the Q&A. We have a couple to go over, but I would encourage you to put any others that may come to mind, and we'll try to address as many as possible. But the first one we have has to do with revenue attribution. What is your process for revenue attribution by department, team, or heads? Can you define how you would attribute carry generated at the fund and management fee revenue? So I guess Brandon or Emma, if one of you wanted to try and take that.
We don't really on our side. We're not doing it at that granular of a level. Brandon, I don't know if you have anything in your.
We are not either.
Got it. Okay. Second one, is your team involved in the valuation modeling process or recipients of the latest valuations from the portfolio investment teams? Can you explain your involvement in any reporting that you are managing?
So we leverage our VALS team's outputs for mainly our late stage real estate funds, given they're fully deployed and they have, better outlook in terms of the full life of the fund at that point. And we take in certain outputs from those valuation models to drive our FP&A forecast. So it's mainly on our fees, and we look at their projected exit timings to think through what that's going to look like on the carry side. In terms of the reporting off the VALS models or involvement in the actual inputs, we're not involved there.
Got it. Let's see. What is the FP&A team's role in investor reporting, if any? Is your team generating any information or reports that are disseminated or shared with investors?
We are not at
So
Blue
our
Owl.
FP&A, same on our side, our FP&A team isn't really involved in there. I happen to also oversee our investor services team, but there's not really much overlap across.
Got it.
One
And the last one. Go ahead, Santiago.
One item I saw came through the chat as well, and does Anaplan have a SOC report? If so, which type?
Yes, we do. We have SOC 1 Type 2 and SOC 2 Type 2 are available depending on whether you're a current client or a prospect under NDA. If you need any detailed information on that, you can reach out separately. We'd be happy to connect you with the InfoSec team on that. But we do have the full reporting available. So we got that. Let's see. I think there's one more here. Are you preparing and reviewing? I think we touched on this a little bit. Also preparing and reviewing compensation details, including carry allocations, GP carry allocations, or which team maintains this within the organization?
So on our side, we have a carve out, like I mentioned, of our comp team, but our carry process and tracking overall is a little bit decentralized right now. We're working towards shifting all of that to our comp team within FP&A. But right now, our real estate accounting team actually accounts for a portion of it. But admittedly, our carry is, a fraction of our overall portfolio.
Similar for Blue Owl, the majority of the carry that the business generates is actually structured outside of the public company. And so that's typically just handled by our carry compensation team. We do partner with them, and leverage certain forecasts with each other, but they're typically handling it at their granular levels.
Great. All right, thank you. We have a minute left if anyone else wants to throw anything into Q&A. Otherwise, I will take the time now to thank our panelists. Emma and Brandon, thank you so much for your time and sharing such great detail. We really appreciate it. Ashley, for a wonderful demo. You can see there's some contact details up on the page now. If you need to reach out, we'd encourage you to reach out directly to Alpha to talk to the team, learn more about the demo that you saw and the apps that are available. If you need to reach out to Anaplan and are unsure who to contact, you can feel free to drop me a note and I'll be happy to connect you with my appropriate colleague. And with that, I will just say thank you for your time and participation. We will be sharing a recording via email. We'll be sharing the recording and some follow-up resources for everyone who attended and anyone who signed up. So thank you again for taking the time. Thank you again to our panelists and to the Alpha team. And we appreciate you spending some time with us today. Have a wonderful rest of your day.
Thanks, everyone.
Thanks.
Emma and Brandon.
Thank you.
Cheers.